In this video, I'm going to review 5 stock mistakes that I made that cost me about $50,000. I'm also going to review my entire stock portfolio transparently so you know what I'm holding. And I'm going to share with you actionables that you can take today so that you can advance yourself 10 years faster. Now, it's my personal belief that it's important to diversify your investments so you don't put all eggs in one basket. That is why, as a property investor, I also heavily invest in stocks. Now, if you're seeing me for the first time, hi, I'm Mark. I'm a property investor with 12 properties. I started my career 10 years ago as a Singapore teacher with the Ministry of Education. But 5 years ago, during COVID, I decided to leave the ministry and venture out as an investor and also a property agent. Now, most of the time, you'll see videos of me talking about property market and properties itself and investment. But today in this video, I want to talk about my stocks and shares investment journey and what I have today. I have around 6 figures. How I accumulated this and what are some of the mistakes that I have made so that you don't go through the same thing. Now, one of the important things to understand about property first is that I cannot be buying a property every other day, but I can make some other forms of investments like stock investment every single day. On top of that, in property, one of the most important things is to take a loan, which is to leverage, right? And in Singapore, there is kind of a limit to how much you can borrow. That is pretty much called a TDSR framework. That is restricted by the income you have. At some point, you will run out of gas because you have fully maximized your TDSR and you cannot borrow anymore. Now, that is when property investment starts to become less attractive. And then with all the money and cash that you have come from like savings and your income, maybe rental income from properties, it starts to accumulate in a bank and you cannot be sitting there idling, not doing anything, right? After all, the bank interest is so low, so you need to find a way to really make this money work hard for me. And for me, I decided to look into stocks because that is like easy and that is also pretty safe if you know what you are doing. So what do I have in my portfolio right now? I'm going to use Singapore dollars and I'm going to use the market value today for easy context and referencing to a Singapore environment. Well, I have $40,000 in Singapore stocks and I then have about $510,000 in US stocks. So you can see the disparity. I put most of my focus in US stocks instead. But it's not a flex, right? It's not to say that, oh, I'm rich or anything. The reason for sharing this is actually to let you guys know how I got here. And so it's important to understand the context of where I started and how I got here. I am actually a very conservative investor. When I grew up, my parents were talking about like fixed deposits. Much of the time, you're looking at advertisements by banks. During my time when I started working, that was about 10 years ago, interest rates from banks were about like 2+%. So that's really the most you can get. And I spent a lot of time like finding instruments that can guarantee something that's about 2.6%. So I went into like bonds by the Singapore government bonds or Singapore saving bonds. And I also went into some insurance products where they gave about 2.8%. I even went to a fixed deposit by Bank of China. So if you deposit the renminbi yuan, they actually gave about 2.95%. After at some point, I realized it was really slow. The amount that I could put in was like $10,000 or $20,000. What came out was a few $100. Really, it's not sufficient to move the needle. In 2019, I decided to take up a course on stock investment, and that was like the first time I was introduced to this idea called value investing, where I had to analyze a company. You know, we talk about the economic modes of the company. But at the time, right, in 2019, there was no AI. Everything had to be manually calculated. To analyze a company, you spend like hours after work just to pour through the financial data of a company. It's like crazy. So in 2019, with very limited knowledge, I invested in Singapore Airlines, thinking that this airline is fantastic. I didn't really care so much about other details, but I realized that in 2019, the next year was COVID, and then the share price plunged a lot because no airlines were flying. We were unsure when we will all start flying again, which means the horizon in holding this stock is a little bit unclear. So I decided to, at some point, I decided to sell the SIA stock, and that made me lose about $1,000. It was a huge percentage in my portfolio. $1,000 might not sound a lot, but it was painful enough. So one of the lessons I've learned here is that if you're investing in a company that cannot float on its own, that requires a government's intervention, it might be a little bit scary. Then I also invested in REITs, and there are some good REITs in Singapore, but because of the environment currently, my REITs are still in the negative territory because of the interest rate right now. I also invested in EC World REIT. It's a REIT that has warehouses in China, tapping on the fact that there's a lot of logistics, e-commerce, and things are being shipped around in China. So I thought that's going to be a booming industry. But I think EC World REIT ran into some financial troubles, or maybe they mismanaged their money. I didn't even track. Eventually, the REIT price is now worthless. I think I've lost about $2,000. I haven't even sold them off because I don't know what to do with it. If you want to go for REITs, don't just look at the dividend yield, because EC World REIT was very attractive with like 6%. I think I will go for the more stable, traditional names, and maybe you get a 4 or 5%. I think that's good enough. Now then, in 2021, after leaving my teacher job, I decided to go into real estate full-time as a realtor, and that made me think that I'm very good and understanding the real estate market, right? So you can see where the mistake is coming. I decided to buy shares of our local property developers like CDL, UOL. I also decided to buy the shares of PropNext, which is a property agency here. Why did I do that? Because in 2021, people were snapping up properties, and if the developers were all selling their properties, right, and they're like selling at hotcakes, it means that the developers are doing well, isn't it? When developers sell their shares, the agents are doing well, the agency will be doing well, and that's why I bought PropNext shares. The thing I didn't see is understanding a company deep enough. So in 2021, although people were buying properties, what happened is also the cost of building properties escalated because we had restrictions about workers, we had restrictions about supply chain issues, so getting material to build properties were getting more and more expensive. Developers were faced with rising construction costs, which means their margins were thinner and thinner. And that meant that the property developer shares didn't grow as much as I expected, so it's not doing well to even up to today. PropNext, on the other hand, actually did very well today. I have no idea why, but I've already sold the shares long ago. Too bad I didn't enjoy the boom recently. All in all, my whole journey in Singapore stocks felt that I was not really making much. I've lost some money, REITs were giving me dividends, but not much. You will never see that huge capital appreciation. Price bubbling, it's always like that. Over the many years, I really didn't receive much money from investing in Singapore stocks. So because I didn't earn much from the investment, I started to think that, hey, maybe I'm not such a good investor, right? At one point, somebody came to me and introduced me this idea of copy trading, where a system copies the trades done by some professionals, and if the professionals know what they're doing, I just need to copy and I'll earn the same. I jumped into this copy trading thinking it was a great idea, but because when stock price plunged, same thing, you execute those trades, you will actually execute the loss because that's what the professionals did. They have enough reserve to execute the loss and still bounce back higher the next day. So they don't mind selling at a loss, but that's not what I want. So I did lose a lot of money in copy trading as well. I think I lost about $20,000, and I think that is pretty much a scam by the person who introduced it to me. Don't copy for the sake of copying. You really got to know what you are getting into. So now we are in 2022. I finally decided it's time to invest in US stock. I didn't know what were the best things to invest, but you know, there was things like Apple, Facebook had just changed its name to Meta, there was Google, and there was a lot of other things like Pfizer, Moderna, because they are related to the COVID pandemic. So I bought all of these, and you know how they turn out, right? Because they were all a hype, just like Zoom. They were like so super hype, but then eventually, as it stands right now, we are looking at a loss at Pfizer and Moderna. It cost me about like close to $5,000 to realize those losses. I also bought things like Walt Disney, thinking that we'll all be using their streaming services like Disney Plus and everything, and it's such a great brand. But actually, the stock also not doing very well. But of course, thankfully, Microsoft, Amazon, Apple, Facebook, Meta, they all did very, very well. Then let's move on to 2023, where suddenly options trading was a craze. I really couldn't understand a thing from the options trading course. But nevertheless, right, I remember some simple strategies where they shared. And so that's when I went to buy some options for Tesla, and eventually, right, I think I lost about $20,000 from just that wrong move. So what I'll say is this: between knowing a bit and not knowing at all, The most dangerous thing you can do is to think that you know a bit and you're going to do something. So 2024 was a boring year. I was just like continue to buy S&P 500 whenever there's a dip. I buy Microsoft whenever there was a dip. So a dip to me is like a 0.5% drop, 1% drop, best if it's a 2% drop. Come to 2025 January, somebody introduced me an investment course, and Kelly, my wife, was very interested. I went to a course by Caden Chang, which is a value investing academy. I'm doing a shout out for him because I really learned a lot from his course. It was so fundamental, it was so easy to understand, and this time around there was so much help provided that I finally understood what options is all about. But of course, Caden, being very conservative, his classes only talk about selling. There's no talking about buying because to him buying is too risky. It's all about finding fair value or undervalued stocks that we can invest in. So at the end of 2025, at this point when I'm recording this video, I do have a lot of US tech shares. I'm still buying them where there's a dip, but majority of them was bought in the 2022 years, 2023. Right now, I also have some US shares that are considered fair value or undervalued. Thanks to the teachings from the Value Investing Academy, we analyze the company, we think that they are a good buy, and we think that there's a potential for them to appreciate in time to come. I'm also selling options on sometimes daily basis or even a monthly basis, and this has actually allowed me to collect really a lot of premiums. When you look at each month, I'm taking in almost $1,000 to $2,000 just by collecting the premiums. So the moment you have all been waiting for, in my 540,000 Singapore dollar stock portfolio, what exactly do I have? As I mentioned, $40,000 in Singapore stocks. Some of them are REITs, but the majority holding are actually Singapore banks like OCBC and DBS. I don't have any UOB shares. I also have ST Engineering. These are my top performers. The other REITs are like CapitaLand REITs. In the US stocks, about 25% is in the SPY, which is the sticker to track the S&P 500. 60% goes into tech stocks like your Alphabet, Amazon, Apple. I have a bit more risky ones like CrowdStrike, a bit of Nvidia, Salesforce. Remaining portion goes to some of the banks like JP Morgan, Berkshire. Other categories like Terex, US property developers like Green Brick. I'm also exploring the travel related things. I also have some in Carnival Cruise Line. So all in all, what is my greatest takeaway? Well, I will still continue to invest stocks rather than putting money in the bank because all these mistakes are recoverable mistakes as long as you know what you're doing. And if you don't want to go down the wrong path thinking that you're an expert, right, might as well just go to a course and really learn. While putting money in the stock market, I can always liquidate them if I ever need to buy a property, which is still my favorite after all. And if you really have to buy Singapore stocks, my guess is the Singapore banks are better off than many other stocks in Singapore. And in general, the Singapore stock market is really quite boring. I would really recommend people to go into the US stock market, and the earlier you do it, the better, because there are really your top performing companies around the world. They are listed in the United States. I'm not going to tell you exactly what to buy, but you know all these big names, and as long as these companies continue to perform well, you're going to have a good chance in making profits. Just in that few years that I've invested in the US market, the share price have gone up so much that it really made my time in the Singapore market feel like a joke. But that's it, the banks in Singapore are still doing fairly well. Hey, if you like this video so far, you're getting a lot of value, do remember to click follow and subscribe. Now, if you guys want to attend Caden's class with a little bit of discount, you can always head to the description box and click on that link below, and I'll share a few how-to because I think his course is really awesome.